Very good evening, everyone. I hope you guys had your dinner. All right, my name is Billy To. I am the Regional Head of Retail Research at CGS International, and I'm the Head of Content at Prosperous Platform. Now, today, I have the pleasure of introducing 17 Live Group Limited, a company that has rapidly positioned itself as a leader in the live streaming space across various markets in Asia. Now, live streaming platform 17 Live Group actually debuted on the main board of the SGX at the end of last year after its business combination with Singapore first SPAC Vertex Technology Acquisition Corporation. Now, 17 Live is a pure play live streaming platform that excels in creating strong interactive communities through its innovative approach to virtual realities. Now, with a solid presence in Japan and Taiwan, the company has expanded its reach across Asia, offering two primary business. Liver, I think this is for the live streamers, and V-Liver, I think the virtual live streamers. I'm sure the speaker later will do a lot more description and explain the business model to us. Now, before I pass the time to him, let me just do a quick introduction to our speaker. He's Mr. Jiang Honghui. He's the Executive Director and Chief Executive Officer of 17 Live Group. Now, previously, he was the CEO and Executive Director of Vertex Technology Acquisition Corporation, and he's the man that has successfully led the business combination with 17 Live back in December 2023. Now, Honghui has a strong track record in venture capital investment, particularly in Greater China, Japan, and Southeast Asia, and he has held leadership roles at Temasek Life Sciences Accelerator and Whisper Limited. So I'm quite sure there will be some exciting journey ahead for the company. But before I pass the time to him, just one more thing is basically our disclaimer here. Basically, this is just a standard disclaimer to tell you that this is basically marketing communication and a tool to help you guys to understand more about companies listed on the SGX. In this case, 17 Live here for today. It's not a recommendation for any investing. If you wanted to, you should consult with your financial advisors to determine what best meets your need as well as your entire portfolio. All right, I'm just going to pass the time to Mr. Jiang. Over to you.
Thank you, Billy. Good evening, everyone. I think my colleague is going to show the slides. Yes, thanks, Shirley. Yep, okay. I think everybody can hear me, right? Yeah, okay, no problem. All right. So I will probably spend about 15 minutes or so to run through a quick introduction about our business, our company, as well as some of the latest progress in terms of our financial and operational performance. And then I would like to actually leave more time for Q&A later so that everybody have a chance to have their question answered. So 17 Live, we actually pronounce it 17 Live instead of 17 Live. It's actually a pure play live streaming company. Okay, so when we say live streaming platform, what it means is that pure play is that the sole income of our platform is through live streaming. Means we don't do, like, for example, short videos, like, for example, TikTok and all that. So we actually does purely live streaming, different kinds of live streaming. All right, so it's a diversified content offering from anything from music, game, education, fashion, to just simply chatting or even lifestyle kind of streaming. So essentially, it's all sort of live streaming, non-recorded, live, happen on our platform. And we feature both localized content that, depending on whether country we are serving, we're mainly serving Japan, Taiwan, Hong Kong, and some other countries now. And we also, because of the local content, we usually serve, or rather we get the streamers that serve the local contents that's more relevant to the listeners or viewers in that particular region. And also we have this thing called the exclusive premium contents. So these sometimes we refer to as the celebrities or the KOLs, and we have done the streaming of KOL celebrities for them to stream either themselves or together with our other live streamers on our platform. So that's the exclusive premium content. And not just human live streaming, which we call the liver live streaming, not just the human live streaming, we also do virtual live streaming. So when we say virtual live streaming, it's not actually referring to AI or whatsoever. It's essentially a human at the soul, means a human speaking, and in front and cover the human's face is what you see is animated character. So this is a type of streaming that originated from Japan since 2015, 2016, and has progressed very rapidly in the recent years and become a main form of live streaming from Japan. And currently Japan is like probably 50% of the market share globally, and the rest like US, Taiwan, South Asia, some of the virtual live streaming is happening as well. You can imagine virtual live streaming is like, for example, like an animated character. It could be, any of your favorite anime. And the character behind live streaming using a human voice behind, I mean, human acting out voice, a virtual character. All right. So that's all the different forms of live streaming. Then, of course, we monetize based on the streaming content, which I'm going to explain in the next slides. Okay, so mainly we have three forms of monetization model or business model. The main one, which currently contribute more than 90% of our revenue, is called live streaming gifting. So this gifting refers to virtual gifting. Essentially, a user or a viewer, in our case, they will purchase the virtual coins on our platform in this app, usually in the app. And after they purchase the virtual coins, we call the baby coins on our platform. They then use the virtual coins to purchase virtual gift and gift it to the live streamers. All right. So the live streamer will receive the virtual gift. Of course, they will record it in their account as a number of virtual coin. We call the baby coin that they received. And then they use this baby coin to exchange so-called compensation from the platform. And we do revenue share with these live streamers. All right. So that's a very simple model. User use money to buy virtual coins and use virtual coins to buy virtual gift and give to the streamer. Streamer receive the virtual gift and exchange it with so-called currency as a compensation with certain kind of revenue share model. Depends on the country, depends on the level of the streamers. Also depends on how well they stream on the monthly basis. So this is the main business model. And other than that, we also monetize our live streaming through two other mode of business model. One is live commerce, which I think for people stay in Singapore, this is probably something which is more common. Essentially, you are selling merchandise, selling could be anything ranging from cosmetics to clothes to any kind of daily goods and all that. So through live commerce, through live streaming commerce, and it transacted on our platform. And some could be transacted through other platform, other links as well. So this is another form of income that we're generating. And last but not least, we also allow the users, the viewers, while they are watching streaming, they can play some mini games inside the app. And some of the mini games, is pay to play. So they actually have to spend some virtual coins to play the games. And this is another source of income for our platform. So altogether, we have these three main forms of income, with live streaming contributing about 90% of all the revenue. Yeah, all consume, rather all based on the live streaming content. Next slide. So the next few slides, for those that are familiar with us, been following us, you actually have seen us already announcing or publishing these slides through the SGXNet portal. So this was our first half result, but just to give a quick summary so that everybody knows how we are doing. So mainly the 6 summary points. Number one is we have turned profitable, net profitable on a net income for the first half of 2024, which is versus a deficit, a loss in 2023. All right. And then also we have also published so-called a quarter-on-quarter Q1 versus Q2 of this year in terms of our so-called operating income. So we have turned around from a negative operating income in the first quarter to a positive 3.5 million operating income in the second quarter. This is as a result of our optimization of our operations and other measures that we help to boost the business. So this is purely coming from operational. So this is operating income, right? And third, we remain to have very strong balance sheet. So as of end of June, we have on our account $85.6 million in terms of cash, and with 0 debt. So which means that company has this purely as a form of asset, or kept in the bank as cash or cash equivalent, which is essentially short-term so-called savings and all that. And fourth, actually I mentioned just now, so how we managed to turn around in terms of operational income, largely because of operational optimization done through various means, including both on the operation side as well as on the technology platform upside. side as well. So that's what we did in first half of this year. And then later I'm going to talk about the forward strategy. We have a few slides on that. I'm not going to elaborate here. And last but not least, we do see our company have a positive outlook. That's why we are very much committed to drive shareholder value going forward. So this is something that currently the company is actively planning. We will announce something when time comes. Right? So this is number 6. The next slide. So this is essentially just now the first 2 points that I mentioned just now. So first of all, on the revenue for the first half of this year, we did $101.1 million in terms of revenue with a gross profit of 41.7. So we maintain a healthy gross profit margin of 41.2%. So this is a profitable business, highly profitable business. And then we managed to turn net income for the first half become 1.9 million versus deficit of minus 108 million last year. And lastly, at the right-hand side, the chart, which I mentioned earlier, we turn around with minus 2.1 million loss in first quarter operating income to a positive 3.5 million operating income in the second quarter. All right, so these are the key gains that we had from operational highlights that we have from us from first half of this year. Yeah. So the key changes that we have done in the first half that we have shared with the public, one, of course, I mentioned earlier, the internal optimization. So this mainly comes from the technology stack optimization, which pretty much is cost saving. And then we also did further business unit reorganization to make sure that we are further more lean, and we are more leveraged, in terms of our operation, and leveraging on all the various means that we can manage to operationalize and optimize the operation to actually to form growth potential for some of the high growth pillars, and in order to make sure that we focus our resources on where the profit and the growth is for the company, right? Such as Japan, Taiwan, Hong Kong. So, and last but not least, we also did quite a bit of strengthening on the middle and top level management. So this is where we see company is positioned for the next phase of growth. So this is something which we focus on doing the first half of this year. And on the external partnership side, we have actually announced on the SGXNet 2 so-called MOUs that we have signed early this year. Both is to extend our reach to our network. So this help our extend, for example, the first one is extend our network into South Asia in the entertainment and the media industry. And the second one is make sure that one of our base, which is Taiwan, we actually are working with a venture capital firm to allow us to get access to more inorganic opportunities in the market, which is one of our key growth strategy going forward. So on the forward strategy, which is very, very important. All right. So currently at the current stage, the company, of course, has been through many years of business development and, of course, encountered various challenges in the past few years, especially after we came out from COVID. So currently, we are focusing on 3 key strategies, right? So on the left-hand side, what you see is that we are still continue to strengthen the current established platform using technology and optimized operation. So this is referring to the live streaming business model, the one I explained earlier. So that remains our core business. So these live streamings mostly refer to human live streamings, right? So this is the business we are focusing on. We are further driving both the top line and the bottom line for this business through further optimization and growth the various business key metrics. So this is a key strategy. For example, we are focusing on how to make the streamers on our platform more successful. So because the streamer come to our platform, they actually not just for a month or 2. Sometimes people spend years, like 6, 7 years on our platform. So we make sure that they can succeed on our platform. We also focus on how to make the users feel fun on our platform, which is something that we are doing a lot of innovations on, using technology, using different kind of productization to help to make the people feel that it's fun to watch these streamers and interact with these streamers. So this is the first core business, which will continue to be the main cash cow for the company and generating positive profits going forward. And the second one is actually the revenue diversification. So this is what I mentioned, the other new business, for example, the virtual live streaming. So that's a new business, which we have managed to grow almost 3x from 2023 to first half of 2024. So that remains as a high growth engine for the company going forward. And we expect this to be one of the key drivers for new revenue segment of the company. So in addition to virtual live streaming, you also have other new businesses, like for example, live commerce. Also another one is pure voice streaming called Wave that we are having. So all these three new businesses are the ones that give the diversification in terms of revenue base to form future drivers of our business. So that's the middle pillar. Can you go back to the previous slide? Yeah. Last but not least, we also spending resources, as just now I mentioned, on building the strategic and business partnership in the ecosystem, because we believe we're not just growing organically, we're also looking at potential inorganic growth through our partnership network. So this is something we've been investing our resources and time significantly. And then when we have something that's material, we will announce in the market, right? So these are the three main growth drivers and the three key strategies that we're focusing on. A little bit more about the virtual live, we call the V-Live business strategy, because this is a key new business segment. Currently, we are growing, and year-on-year growth is actually signifying this is actually a high growth. The industry is growing very quickly, and we are one of the fastest growing companies in this industry as well. So how are we going to grow further this business? It's a little bit different from how we're doing for the core live streaming business. So imagine just now I mentioned about the live streaming we are running as a platform whereby people will buy, virtual coins to exchange for virtual gift and give to the streamers. So that is the platform business on the right, on the left, which we are doing the same for virtual live streaming. But at the same time, we are also developing another business model on these virtual live streamers, which is called the IP business. So IP business is basically IP, in this case, is not intellectual property. IP referring to a virtual character. So, I mean, for simple analogy, like Mickey Mouse is IP, right? Now, Iron Man is IP. Superman, of course, IP. All these are IPs. So there's many IPs in the virtual live streaming world. And currently, we are also building our own IP, which could be the next generation stars in this virtual live streaming world. So this is the new business that we've been doing since the beginning of this year. And we already have seen significant tractions in this business segment, which we're going to further grow this together with the platform business for the virtual live. So it's a platform plus IP business going forward, and which is going to kind of like, it will help each other with each other. And one give other platform resources, the other one give you the potential for exponential growth, because IP can potentially attract a lot of traffic. All right, so there are very successful IP-only companies in Japan that itself fetches over $200 million in terms of revenue. So this is the business segment that's been growing quickly. That's why we are capturing the growth by both the platform on the left and the IP business on the right. So there's the V-Live business. Next slide. So this one I'm not going to elaborate further, essentially showing how large the potential market size that we are tapping into. And we're not just doing human live stream, we're going to virtual live streaming, and we're going to go to the wider live and social entertainment. Of course, eventually the broader entertainment market that we are targeting on. So yeah, I'm not going to elaborate on this. This one's quite easily accessible online. All right. So as a summary, in terms of outlook, so what we believe company actually is positioned for growth going forward. And especially after all this internal operational optimization that we've done in the first half of this year, we are much more healthy in terms of margin, in terms of profitability. So this is a time whereby we can position for future growth, both top line and bottom line, on the back of a growing live streaming global market that's currently growing about 23% year-on-year. All right, so that's the backbone market that we are riding on with a healthy, P&L and a balance sheet, and further driven by our growth strategy pillars, the three ones I just now mentioned. One on the core business, second on the new business, third on forging strategic and business partnership to build, inorganic so-called opportunities from our platform. And lastly, with all this, we believe it can drive long-term value for our shareholders, because I think one of the key things we're going to continue to deliver both growth on the top and bottom. So I think that's the only way that we can get more recognition from the shareholder and drive up our market values of our company. So with that, I come to the end of my presentation. I would like to take questions.
Yeah, Mr. Jiang, thank you for your concise and brief introduction of the company. Right, I think we do have some questions that we've received earlier on. Just wanted to highlight some of those while we wait for some Q&A on the box. Maybe Mr. Jiang, maybe you want to start by giving some background and the nature of the live streaming industry, especially in both Japan and Taiwan, since those are your two biggest market, right? Just for the audience to have a understanding on how the market is like.
Yeah, thank you, Billy. So, live streaming market in Japan and in Taiwan actually is quite different from maybe how we perceive it from Singapore. So, being a Singaporean, I mean, when I talk to people in Singapore, when you say, "Oh, we are doing live streaming," the first image people come to mind, "Oh, what are you selling?" Right? So, most people when you will relate live streaming to live commerce, which
Yeah.
is one kind of business model that's around live streaming. But that actually is not the first business model that came out. In fact, for those people who are familiar with live streaming, even in Singapore, 5 years, 10 years back, it started actually with a very similar business model as currently what we're doing. All right. So essentially, it's human doing live streaming and then for user to interact with them and provide them with virtual gifting. So this is how live streaming initially happened. But somehow, in South Asia, due to many reasons, I'm not going to elaborate here, the industries start to gear towards more of the live commerce kind of live streaming in the recent years, which dominated most of the live streaming format that we see in Singapore and in South Asia. So, which people start to forget, actually, live streaming start off with virtual gifting. So Japan and Taiwan is a little bit different. They are not that early in terms of entering into the live streaming market, especially for Japan. Japan, we entered Japan in 2017, 2018. We are the first player there. So we are still one of the largest, in fact, one of the two largest players in Japan right now. So Japan is a very much pure form live streaming with a very long tail, which means that anybody from anywhere in Japan, whether it's city, rural area, can pick up the phone and stream about their life, about they can tell stories, they can do whatever they can. They can even be like drawings or building up some kind of models or whatever, artwork. They can do anything and then they can stream the content. And there's a very strong so-called support culture in Japan. So essentially, when people like your content, they will give. They will feel like it's a form of donation. They feel like this by gifting, providing virtual gifting to you, they support your living. So this is a very common culture in Japan, which isn't that common, honestly. So actually, when if you were the first to hear of in Singapore, you wouldn't imagine why people spend hundreds of dollars, which is very normal on our platform, a month, US dollars, to one particular streamers just to support their living. They feel that these people have something, they feel connected, right? It could be an artist, it could be a singer, it could be an instrumentist, it could be just a pure chit chat talkers. So this is very much Japan. All right, so Japan is very unique. It's a latecomer for live streaming, but probably the most well developed and well diversified live streaming market currently in the world. Taiwan is very much like early days of maybe Singapore or South Asia or China. So it remains the pure form of live streaming. And of course, live commerce is also quite common in Taiwan, but that still remain as smaller when it comes to the live streaming market. So live streaming is quite a big market by itself. Only recent years, I think Taiwan started to do live commerce streaming. So Taiwan is basically, mostly human, but the diversity is less as compared to Japan. The tail is shorter. It doesn't have that kind of long tail. Usually it's still mostly chatting, singing, and less of the other kind of streaming contents. So that's pretty much. So, and then Japan and Taiwan still remain as probably the most profitable live streaming market in the world currently. I think they are it's still more well balanced compared with South Asia. South Asia live stream market is not, I'm not talking about live commerce. The live stream market is not really that profitable. Yeah.
Okay. Sorry, Mr. Jiang, do you mind sharing some of the competitors, the big competitors in both Japan and Taiwan? Some of the names that
Sure. So in Japan, other than us, there's another local player. The name of it is called Poco. So this is actually they are under a group called DNA, Dina. So they are operating also pure form of live stream, but they're a little bit different from us. They focus more than us on the long tail, on the small local communities, on everyday streamers. We focus a bit on the more, I would say, high end or the more skilled up kind of streamers. So typically, people usually will comment that our streaming content is of a higher quality than Pococha. So these are the one of the main competitors of us locally in Taiwan. Sorry, in Japan. Taiwan, we have another competitor called Lang Life. So they are also, similar to us, doing exactly the same thing. In fact, they were the latecomers compared to us in Taiwan. They actually, follow our footsteps very closely over the years. So they are, with two of us are the two largest in Taiwan. They're doing exactly what we're doing. And then, of course, other than the local competitors, there is a competitors across both market, which is TikTok. So TikTok came into live streaming pretty late, about 2 years ago, but they, because of the traffic and the volume, they have been quite, in terms of, competitiveness, in terms of the volume, the traffic, and all that, is quite a strong competitor. But however, they are very different from us. They are not unlike whether we in Taiwan or Japan. They don't really invest in building up the local live streaming ecosystem. They are purely a platform for monetization. So which means that which we believe in the longer term, we covers the entire spectrum from start to where to make the streamers successful, while they only focus on maybe one segment of the market. So although their volume is quite big, but we don't see them as a holistic competitor in the local market because their presence locally actually is not that strong. All right. So and of course, if you're talking about game streaming, which is also one of the genres type on our platform, then you have of course the likes of Twitch, the likes of YouTube, other kind of live streaming platform. But usually, I would say there's some smaller players, but the main competitors are the ones that we mentioned.
Okay, thanks for the background. I think this will help us to understand better on the industry as a whole. Just a quick one. I think looking at your financial, especially on the net income, like you achieved a net profit of 1.9 million in the first half of 2024. That's a sharp turnaround from the previous year. What's the key drivers for that? I know you mentioned about optimization, but because of the huge significant difference, do you mind sharing some of the key initiatives that you guys have done?
So the net income change from last year to this year really largely because last year there was a large so-called financial asset valuation adjustment, and that's relating to some preferred shares that was on a company's cap table. Because once you turn to a public company, the preferred share is going to change to common share, and because of that, there's a valuation write down because preferred share was recognized at a different valuation. So that reason it was purely, it's not operational, it's purely financial and purely accounting kind of adjustment. So that's why you have a big so-called net loss in 2023. So this year, of course, we don't have that. That's why this year is a positive positive net income. But more importantly, the part which I talk about, the operational efficiency, operational optimization, and all that is relating to the how we change from a negative operating income in the first quarter to a positive operating income in the second quarter. So that's the key change. And then some of the initiative, as I mentioned, technology stack optimization, essentially saving costs on, say, the likes of Google, Amazon, and all these large cloud platforms. And operational efficiency means we further, streamline some of the operations and then refocus on some of the key business regions like Japan, Taiwan, and Hong Kong, and some of the key businesses. So we actually managed to trim down some of the expenses. So that's where we managed to actually to be more profitable into the Q2. So this, is rather healthy if you look at a quarter alone in terms of our, operating income, right? So that's some of the key things that we have done in terms of turning around.
Okay, that's good to know. I just wanted to know, I think you talk about the virtual live streaming business that grew about 3 times from 2023. Was it 2023? I think, yeah.
23 first half, I think we did about 1.5. In the first half of this year, we did about 4.8. So roughly about 3x plus growth revenue. Yeah.
So what's currently in terms of the contribution to the group's revenue in terms of percentage? What
It's
is
about 5%. Roughly about 5%. 5%.
5%. And do you have like a internally, do you guys have a long-term target for the contribution? Like, how is it going to be like 50,
Yeah.
50?
Yeah, so we don't exactly disclose that number, but I would say that we expect the percentage to increase significantly over the next few years. So remains one of our key drivers for future growth, because this is actually we see this market itself is growing very rapidly, and then we are in a way relatively a smaller or newcomers in the Japan market for this, but we're the only one actually currently offers both a platform play as well as an IP play, which is very unique. So there's platforms that there's a company which purely does the platform, means they don't operate and own their own IPs, means their own characters, or there are companies which purely own characters, but they don't have their own platform, means they stream on YouTube, other platforms. So we have seen both such kind of companies in Japan, but not one company that does both. So we're the first one to do both platform and so-called IP, and we see this potentially is going to be the key driving strategy for us to grow, into the future for me.
Okay. I think you talk about the industry is growing very fast. Do you have a percentage that you can share with us in terms of
Roughly is depending on how you measure it. There's different measures, but I would say it's in the high tens. Some says it's 40%, sorry, 40 plus percentage. Some is 50 plus percentage. But I mean the yearly growth speed. Yeah, so it's a very fast growing market. Yeah.
Okay. And then you mentioned that the two, right, the platform and the IP, the two prong that will drive this growth. Which one will be your, in terms of priority, which one will you be focusing on?
Actually, both are important, right? So platform is important because platform, you can think about this as an incubator. So there's a lot more organic virtual streamers that come to our platform. That's in the thousands. So these virtual streamers, they actually, some of them could be successful, some of them not so successful. So this platform is a way for us to filter and select the future potential ones. All right. So IP is when you see this one potentially can be a big driver for revenue going forward. I'll give you a reference how profitable or how much income IP can have. I'm referring to two of the largest IP virtual IP companies in Japan. One is called Anycolor, another one is called Cover. So both runs its own IP business. So they combine together owns about less than 300 IPs. All right, 300 IPs. But per IP, on average, generate anywhere between 1 million to 2 million US dollar a year. And the highest so-called revenue generating IP can drive up to 10 million US dollar a year, one IP. So we have about 10 IPs that currently we are operating right now. They're relatively still small, but we see them growing quickly and potentially they can actually grow to big IPs going forward. That's why we are doing both IP business as well as the platform business. It serves different kind of strategic purpose. All right. At the current moment, because our IP business is kind of new, our platform business has been running for a little bit longer. So of course, most of the revenue come from platform business. But going forward, I know we see actually IP business is something that can drive growth as well.
Usually around how long do you think the IP business will start to be more meaningful?
It depends. It depends on the cycle. Some more successful IPs can start from their debut to coming to like a more mature and high revenue earning stage around about 2 years time. Some could be takes 4 to 5 years. It takes time for you to grow. So usually, if you're talking about a typical, most of the IP, by the way, the successful ones globally are all on YouTube. So the big YouTube IPs for virtual IPs can command a subscriber base of more than 10 million. Yeah, so that's where the monetization comes, because you're not just doing live streaming, virtual gifting, you're actually doing other business model, for example, selling goods, selling merchandise, so-called those kind of figures, stickers, could be digital, could be physical kind of goods. And it could be also, can be other form of revenue stream, for example, events. They organize offline events, which some people cannot imagine. Like, how can a virtual streamer have offline events? Yes, they perform offline through a holographic kind of stage, and they have real human fans, tens of thousands of them, so-called shouting and dancing off the stage. So this is where virtual IPs, live concerts are. And the other things, like for example, enterprise collaborations, means you basically use your IP as the brand ambassador for certain brands, and this is very common actually in Japan. I'm thinking about Hello Kitty, right? Hello Kitty is an IP. So how successful Hello Kitty is. So of course, in the virtual live state or live stage, you have other kind of the Hello Kitty equivalent. So this is why this is a fast growing business. And people think about anime, the first market they think about is always Japan. So that's why Japan is a very strong virtual live streaming market.
Okay. Just I noticed on your slide, I think one of it that you talk about is to drive shareholders value. And I think there's a question regarding whether the company will declare dividends, and if so, when can shareholders expect? So do you want to share some of this if there is any?
So currently we have nothing yet ready to announce on the dividend side. Of course, there's many ways to give shareholder value. Of course, because coming from Singapore, dividend is something people are more used to. Yeah,
Yep.
but I mean, typically Singapore, because it doesn't have a lot of technology stock, especially come to internet or media kind of technology company like us, I don't remember there's another sizable ones like us. So that's why people are not very used to the kind of business model and driver for the business. Typically, if you look at such companies globally, typically there's many different ways that we can drive up shareholder values. So dividend is one of the option, but it may not be the most capital efficient way of doing things, because there's other ways to prove the value of a company, to drive the value of a company, which of course we are concurrently exploring. When we have something more confirmed, we actually will announce to the market. Yeah.
Okay, cool. That's fine. I just want to ask, I think you shared quite a few different strategies just now in terms of how you guys wanted to grow the company. Where can we expect the key growth areas for you guys?
So of course, VLiver is the kind of key growth areas that we have, which I mean, I've already proven that we've grown a lot in the first half of this year, and we continue to invest into the growth in the second half and going forward. And then, of course, the other growth is come from our core business, but that one will be, in terms of growth speed wise, it's not as going to be as fast as VLivers. There's a core business. So other than this core business, VR business, we have some of the new business, for example, like live commerce. So we announced about a month ago about our venturing into cross-border live commerce. So which means that we sourcing for the merchandise in Japan, and we cross-border and we sell it into Taiwan. Right? So currently we are already starting that business, and we have shown some initial traction, promising tractions. And if that one were to do well, the next stage will come to see whether we can do cross-border live commerce into Singapore and South Asia. So these are also some of the areas of growth that we think is going to drive the company going forward. Yeah.
Okay.
And that's more organic. And of course, we also, as I mentioned earlier, we're also exploring various inorganic opportunities, because we're sitting on quite a big war chest of cash. So that's something which we are currently also exploring. Yeah.
Okay. I think we've seen I mean, in terms of the share prices have performed relatively well, But I think for a lot of retail investors in Singapore, probably it's like you said, not a lot of us are used to companies like One Seven Life, right? So would you mind sharing with us how can, we value companies such as you guys,
Yeah, typically for technology company, one of the key valuation metrics, which unfortunately in Singapore people don't really use it, largely because there was not much such company in Singapore. If you look at the US market or Hong Kong market, the typical valuation metrics are EV over EBITDA. All right. So EBITDA is essentially operating income plus back the depreciations. So imagine whatever operating income that we report, the EBITDA is going to be higher than operating income, usually, right? Usually. So that's the denominator. And EV over EBITDA, EV is enterprise value. Enterprise value is calculated the company's so-called market cap minus the cash plus the debt. Okay, because we don't have debt on our balance sheet. So essentially it's our EV minus cash. So currently I think we're trading about $1.2 around there. So roughly multiplying our current share price and our share base, about 178 million shares, roughly is about 200 million ish kind of like Sing dollar valuation. If we minus the cash, our cash is 85 million. So in US dollar, roughly Sing dollar, maybe 110, 120. So it means our EV is only about 80 million, right? So 80 million. So if you use 80 million divide by our EBITDA, so I mean you can maybe use Q2 as a reference for EBITDA and multiply by 4 quarters. You can see that our EV or EBITDA is actually about 5-6x or even less. All right. So typically in this market technology company, a EV multiple of 10 to 15x is actually quite common. So we are quite, in a way, undervalued from that perspective. Yeah. So of course you can do your own maths and to actually calculate and make reference to similar kind of company in this market like us, which traded positive EBITDA and traded on the US or traded on the Hong Kong stock market. Then you will see that actually how different in terms of the multiples that we have compared to them.
Okay. Yeah, I'm just interested to know. I mean, Singapore is probably not used to this kind of company. So what's the thinking behind to be listed in SGX instead of the
Yeah, I mean, largely because because I was on the other side, right? I was on the acquisition side. I mean, largely because we think Singapore in general still value profitabilities. And 17 Life is actually not quite a rare kind of asset currently in the market in this kind of technology frontier, entertainment platform business with a sizable revenue and with a profitable net income. So that's something which is very unique. So which why when we bring it to Singapore, of course, as part of listing company will receive cash as a form of proceeds. So this is actually where the company can, proven that is a profitable company and it's easier for the Singapore market to actually to recognize and acknowledge it. So that was one of the key reasons why we actually chose a relatively more consumer-facing business with a profitable P&L. So that's the main reason behind we choosing this company.
Is there any plans to expand your services into Singapore? I know Singapore is not one of your key market at
Yeah, so live streaming, I mentioned South Asia live streaming mostly is live commerce, and then live commerce is actually a very new business compared to us. It's a smaller business than virtual live for sure. So, but this is something which we see as a potential. But instead of like competing directly with the likes of TikTok, Shopee, Lazada, all these that are doing platform live commerce, what we're going to leverage is our resource currently we have in Japan. We see whether we can do cross-border. So we are currently working out or proving it in Taiwan. We have seen some good initial traction. If Taiwan is going to be successful, means that we have secured this kind of cross-border interest. The next so-called country or the next market that we're looking at is South Asia. Of course, Singapore is one of the key market here. So this is where we think we can re-enter Singapore with a more sustainable and a profitable business model. Yeah, running live streaming alone in South Asia, as I mentioned, is not a profitable business model because it's a very different dynamics in South Asia. Yeah, for pure live stream. Yeah.
Okay. Yeah, I think I noticed just now in your slide, I think there is the IP groups, Bushi Life and Gangun Girls. Am I correct?
Pangangas. So these are the two IP group that we have debuted. One was sometime in the third quarter of last year. One was actually in the January of this year. Yeah.
So is this going to be profitable already or no? Sorry.
Oh, they are still small. They are still small means that we are still in the initial investment stage whereby we're going to grow their fan base in YouTube and all that. So we're still some is doing on our platform, some is doing on YouTube. So we are growing them as an IP business. It's a different business model I mentioned, right? So live streaming business is purely based on gifting. So that one is our platform business for VLiver. And then our IP business is we're going to grow the mainstream popularity of the so-called viewers, followers. And for that, the largest platform in the world currently, hosting all the virtual live is still YouTube. So that one we are currently still in the early phase of building. Yeah, revenue is still small, but has shown some good early growth tractions.
Okay. I think you mentioned some of your competitors earlier. I just wondering what makes you guys different from them, and especially in terms of your competitive advantage.
Yeah.
Some of those. And of course, one more thing is how are you gonna compete with like some of the bigger boys like TikTok, Twitch, and all that?
Yeah, yeah. So, well, I mean, I mentioned about the competitors in Taiwan, Lang Life. So they are actually very similar. So actually, we are not that much differentiated. It's basically two players about the same size that's currently operating in Taiwan right now. Yeah. So that one we are driving more differentiation going forward. But at the moment, pretty much, because as mentioned, they follow our footstep very, very closely. So whatever we do, they will do it. So, that makes it hard for us to get ourselves differentiated. We differentiate, they will follow, right? So that's Taiwan. So Japan is a bit different. Pococha and us, we will say Pococha is much more long tail. So they are into all the second, third, fourth cities or fourth tier cities of Japan. They're very much local community based, which is a different kind of user group compared to us, right? But we are focusing more on the premium, so-called higher end or the more better performing contents of the streamers. So it tends to be more on the mid to higher end of the streaming ecosystem. Pococha is not covering low end, they're covering the common people more. So they have, for example, they have higher user base, but on the per user contribution, revenue contribution, usually called ARPU, are smaller. Yeah, we are smaller user base, but we have a higher ARPU because we feature more premium contents. Think about one as a selling a Casio watch kind of business. We are selling like a Rolex kind of business. So it's a different kind of user group. Although we are both doing live streaming, both selling watches, but we are doing different kind of audience in a way. Yeah.
Maybe the cash that you're sitting on, I mean, I know you talk about on the inorganic growth. Are there any plans for any acquisitions that, or if
We're
they,
looking at something. Yeah, we are working on something, but we are not haven't it's not announceable yet. So it's why when something is more concrete, we announce it.
okay. And sorry, just wondering in this expansion, what sort of synergy that will attract you guys? What else are you looking at? Are you looking at valuation, or are you looking at something that can help you to diversify your revenue base further?
Yeah.
Maybe-
So as I mentioned, the key drivers of our business is one, of course, is a core live streaming business, the human live stream business, which does currently contribute majority of our revenue as well as our profit. So this one is the core business. And the new business within that, of course, VLive is the biggest part of the new business. So our M&A or inorganic growth strategy is going to be aligned with the core strategy that we're having, the forward strategy that we're having. Basically, how to strengthen our core business further and differentiate, and how do we grow the new business, especially the VLive business. So you can pretty much imagine whatever we're going to do on the inorganic side is going to focus on these two.
Okay. All right. I think I've done most of the questions that I've got. I've already mentioned. If there is no other questions, I think we can end the session. Right. Hey, thank you, Mr. Jiang. I think it's a very exciting time ahead for you guys. Looking
Thank
forward
you.
to all
Thank you
these.
for the time. Thank you, Billy.
Thank you everyone for joining. Thank you.
Bye,
Bye.
everyone. Bye.